Welcome back to Tashkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.4577 mark, and here on TradingView the market is down by 1.1%. and in this video I want to give you the key scenarios that can play out on this chart. Also have a look at the key areas of resistance and supports that we need to hold for us to continue seeing higher prices on the Polygon Matic chart. And I'll be basing my analysis on the Elliot waves and the Fibonacci's. So if you're interested in such content, make sure that you stick around till the end of this video. So from the all-time high, Polygon Matic has been seeing lower prices in this massive ABC correction, which has taken us to around the $0.031 mark, and from there we started seeing a bit of a recovery to the upper side, and I believe Polygon Matic has done whatever it needed to do in its ABC correction, and soon we might see a bounce to the upper side in an Elliot wave pattern, having a wave 5 taking us back to an all-time high. But before that happens, we need to first have a wave, a 5 Elliot wave pattern here in a wave 1, and the minimum target that I expect that wave 1 to the upper side to take us is the area between $1.9 mark and the $1.6 mark, and that I'm basing it on the Fibonacci's. So if I apply the fibs here, you can see that that area lies between the fib level 0.5 and the fib level 0.6. That is that yellow target for the wave 1. That is the minimum that I'd expect that wave 1 to the upper side to do, and I believe the ABC correction might be done, because if I apply the trend based fib to try and get a target to the lower side of these waves here, can see that if I apply the trend based fib, it gives us a maximum target of around 1.61 on the 1.618 fib level. You can see that takes us to around the $0.34 mark, and the ABC correction has gone to around the $0.31 mark, and that would mean it's possible that the low is in, and soon we might see that move to the upper side. And from the low you can see that we have had a very nice bounce to the upper side, and I believe this is a wave 1 to the upper side, and we are in a wave 2 to the lower side. Then soon we might see a wave 3, and then a wave 4, and then a wave 5 that will complete that wave 1 to the upper side. And if I try and use the fibs to see where that wave 2 can retrace to, if I apply the fibs from this low to this high of that wave 1, that wave 2 should retrace to around the fib level 0.05 and the 0.618, and if it breaks below those key areas on the Fibonacci, it can go to around the 0.038 fib level, and that has happened. And from that point that we made a touch on the fib level 0.38, we had a reaction to the upper side, and we are facing a key area of resistance at around the $0.48 mark, and we have been unable to break above that key area of resistance. And some of the key possible scenarios that can play out here are that we can continue trading to the lower side. If that happens, it's possible that we go to this key area of support that we have next year at around the $0.4 mark, and if we lose that key area of support, it's possible that we go to the next key area of support at around the $0.033 mark, and that will be the beginning of our wave 1. And if we go to this key area of support, that is the low at around the $0.31 mark once more, that will be invalidating this move to the upper side, and that would mean that the low is not in, and we'll have to recount the Elliot waves, that is begin another Elliot wave count to the upper side. And if we continue holding above the $0.04 mark, it's possible that we have a bit of a consolidation here and then have a bounce to the upper side, and we break above this key area of support at around the $0.48 mark. And once that happens, we can have a retest of that area and then continue pushing higher in that wave 3 of that Elliot wave pattern to the upper side. So those are the key moves that I expect to play out on this chart, basing it on the Fibonacci's and also on the support and resistances. And if we also have a look at the indicators, you can see that on the RSI we are trading at around the 42 mark, and that would mean we have room for us to continue pushing higher and also to the lower side. So if we continue trading below that key area of support, it's possible that we continue seeing lower prices. That is a retracement on the RSI. And if we break above that key area of resistance, the RSI has room to accommodate that move to the upper side. Also on the MACD we don't have much, but we are seeing a decrease in the volume on the MACD, and soon we might see a bearish cross over here. So I'll keep you updated on how that plays out. Also on the 4-hour chart, on the indicators, you can see that on the RSI we also have room for that move to the upper side and also to the downside. On the MACD we have soon we might be printing a bearish cross also, because we are also seeing a decrease in volume on the MACD. So those are the key scenarios that can play out, and keep you updated.